Very warm welcome to everyone, and especially Professor Yuemei, and a warm welcome to everyone to her inaugural lecture. Welcome to colleagues, friends, academics, family, and a special thanks to the CEAS tech team for filming and everything else, and for organising the event. We're all looking forward, I'm sure, to hearing the lecture in a moment. The topic of which I'm saying is the European Central Bank. So, as a film studies scholar, this is one that I'll definitely learn a lot from. I'm a bit player. I'm a kind of coordinator, if you like, a sort of preview of coming attractions. The main one of which is here. Well, normally my kind of role, if it's in the Gustav Park, is to tell people where the fire exits are, but you know that a lot better than me, and I always get lost, so I will be following you. Inaugurals are important milestones, and they are celebrations of a senior academic at the height of their career. And they mark a promotion to professor, the highest grade an academic can achieve, and a magnificent achievement at that. They are also quite hard to deliver, I've been told. I've always managed to just duck the radar. I've never actually had to do one. So they are both scholarly, but they are accessible because they are public lectures. So I'm certainly looking forward to being both entertained and enlightened in equal measure. As part of the ritual is to pass from one person to another before the main attraction. I now pass over to Simon, don't I? Simon Digson, who will introduce our esteemed lecturer, and then after that, I think Slavo, you are going to do the response. I really look forward to it. I'm now going to pass the microphone on to Simon.
Well, ladies and gentlemen, it's a great pleasure and a great honour to be able to introduce Yuemei tonight for her inaugural. You know her well, but she graduated from Fudan University in Shanghai, and from then, in economics, and she then went on to Belgium, to Leuven. Lucky person. What a nice place to do a PhD. And she stayed in Belgium. She became a research fellow in the Centre of European Policy Studies in Brussels, and then moved as a visiting fellow at the European Institute in LSE. And it's very nice to welcome guests from LSE this evening to her lecture. She's done a lot since joining us here at CEAS. She ran the economics program for us on the teaching side, and she's had a huge contribution to research in three ways. Her first major theme in research is about market reforms and economic growth. Her second is related to adopting a behavioural approach to the study of the macro economy. And then the third theme that she's interested in focuses on the European monetary integration. And in connection with all those things, she's published an awful lot in all the best places. And one of her papers on testing the fragility of Eurozone government bond markets, quite a nervous sort of topic, is among the most cited papers in the Journal of International Money and Finance, and is widely considered a must-read in the study of Eurozone monetary integration. So she's operating at the top level, and she's got a paper coming out this March, I think, is that right, in the Journal of Economic Literature, concerned with advanced economies and structural reform and economic performance. In addition to all these articles, she's published 3 books. One's an advanced textbook on behavioural macroeconomics, that's with Oxford, and the other 2 are edited books on reforms in Europe, one with Oxford and the other with Cambridge University Press. Well, not surprisingly, her research has generated important policy implications, particularly concerning the role of the central bank and the need for political integration within the Eurozone. She's a member of the Monetary Policy Experts Group for the European Parliament, and she supports its hearings of the President of the European Central Bank. She's also consulted by a very wide range of policy professionals in think tanks and European organizations. Equally unsurprisingly, she has attracted a lot of money. Not personally, you understand, it's not a brown envelope operation. She has attracted a lot of financial support for her research. From 2017 to 2020, she won 2 major research grants as principal investigator, funded that's by our own UK ESRC, the Economic and Social Research Council. And between 2015 and 2018, she was an investigator funded by the European Commission Horizon Scheme for 2020, working with 8 research partners across Europe. She's widely connected and networked in Europe. She's a fellow of the Centre for Economic Studies, one of the largest networks for economic research based in Munich. And she's an active member of the European Behavioural Macroeconomics Network. So she's an all-round very good egg, and has done an awful lot of work in major themes in economics. And it's on that basis that she was promoted to be Professor of Political Economy and Finance at UCL. So this is her day. It's a great day for her, and I hope you immediately welcome her in the warmest possible way before she gives her lecture.
Thank you very much to you, Simon, and also Stella, introducing me. So actually, 2 days ago, I received a notification that we had to change the venue. Actually, initially, when they asked me which venue I would prefer, I would say, well, maybe Masaryk Room, because you can feel more intimacy. So yeah, I do have this feeling that probably that the distance become much closer, and then I feel a kind of more supported. So in a way that I think this incident probably make me a bit happier. So thank you very much for coming. And also I received emails and a message from some of my colleagues. They couldn't come, but I'm still very grateful that they remember that this is my day. So I would like to first start to say a bit about myself. Actually, Simon did a quite good introduction, but maybe from my own perspective, okay? So actually, it was 20 years ago I arrived in Belgium and then started a master and a PhD degree. I now think about at that time, probably it's the great time of the globalization period. So I met a lot of international friends and we studied together. So actually my PhD's research was about behavior economics and also public economics. My first plan was I plan to go back to China. As a junior researcher, I was quite curious about very wide range of topics. And so, like many of you, I equipped myself with a variety of theoretical and empirical skills to support my economic research. That was a good memory for me. And during this time, I actually taught an undergraduate course on the economics of European integration. And then my research on European Monetary Union, in fact, started around 2011 to 2012, when I became very interested in the Euro sovereign debt crisis. Actually, I was fascinated by the European integration project, which is in great contrast to China, the country where I came from. So let me put it this way, that Europe is like an economic union with very limited political integration. It is a bit like a marriage that promises all the economic benefits, but put little joint ability, or love, if you frame it more romantically, when a partner is in trouble, right? So as probably you know my work, this theme has reoccurred frequently. I sometimes have wondered if there's a deep variable among the Europeans, so from my Chinese perspective, that could ultimately lead to a happy ending for real union. So that was something always occurring in my mind. So in 2013, I arrived at CEAS. I can say that where I flourished academically and where I also continue to work today. This is the place where I trained myself intensely for my teaching. It is also provided an environment that quite emphasizing policy-relevant research, area study, while I must say that the environment takes a relatively relaxed view on publication in top-ranked economics journal. So I think this is a very, it's an environment provides some kind of freedom, academic freedom. Within our economics and the business group, I also develop a kind of personal connection to comparative economic studies, transition economies, which resonate with my experience when I was studying China during the early 2000s. So I would like to thank many colleagues and also my PhD students actually at CEAS. They are also here today, who have actually inspired my thinking in my research work and also to some degree influenced my research agenda. So I would also like to thank Paul, who is here today, and then with whom I actually have collaborated closely. So thank you very much for getting together here. Maybe now I'm going to move on to deliver the lecture. Okay, the topic of my lecture today is about trust and the central banking in Europe. Actually, in great uncertain time, you actually will feel that trust is becoming even more important nowadays. But let me show you a bit about the public trust, how it evolves in the Eurozone and then in the last 25 years. So the trust actually is the definition as the share of the responses from people who actually trust the European Central Bank. So you can see the figure into different groups. You have the Eurozone as a whole, and then you have the core member, which means that they joined the Eurozone much earlier, and then you have the GIPS countries, which joined the country a few years later. They include Greece, Italy, Ireland, Portugal, and Spain and Cyprus. And then you also have the new member countries who joined the Eurozone actually after 2008. So actually, for those countries joined the Eurozone, and in the beginning, the level of trust is relatively high. And then actually the decline in trust in the Eurozone, and then in also these different groups, started with the financial crisis in 2007 to 2008. So, and then the important events is the sovereign debt crisis in 2010 to 12. Actually, the trust actually accelerates its decline in the countries, in the GIPS countries I mentioned earlier. And as you can see that the trust level actually bottomed in the period around 2014 to 2015. And then since then, it gradually improved. And then even if you look at the pandemic period, actually, it didn't collapse. Actually, it improves gradually. So which is a kind of good news. But still, you can see that the trust level is still not optimistic because it's still very much below the earlier days when these member countries joined the Eurozone. So that's something that is very much concerning. I think this is a very important research question that we could ask. So then, naturally, as a public institutions, then you will say, well, how do they think about the trust, right? So what is their objective? And then I checked that the ECB, the European Central Bank's, the objective on their website. What they say is that our main aim is to maintain price stability, i.e. to safeguard the value of the euro. So in a way that they believe that maintain the price stability is a very important factor for them to have the trust. Okay, so this is from the official point of view. And then we did some research. So actually, my PhD students, we did some empirical research to see what are the major determinants or factors which are very much relevant to trust, right? So we did some empirical studies, and then we actually find something that is very, very different from the official view. So we find that inflation is not a very significant factor. So for the reason, well, we can discuss later. I don't know whether this lecture I'm allowed to be questioned, but maybe it will be allowed.
We don't usually have questions at an inaugural, but we can.
Yeah. Okay, but for the inflation, that we find that this is not a significant part. But actually, we find that the most significant and the strong determinants actually is related to the government bond spread, which is the individual interest rate of a particular country and compare with the German interest rate. So which we called the government bond interest rate spread. So the higher it is, the more likely that the individuals report that they do not trust the European Central Bank. And then we also find other things related to like asset price, right? So these are positive determinants, but if the asset price grows too high, and then you also find that the survey shows that people tend to not to trust the central bank. So that the asset price stability become a quite important issue. And then we also look at unemployment and also economic growth rate. So these are usually recognized in the literature that they are also very much important factors. So in order to understand a bit well, I would like to go through several events, so that which will tell you how these events actually link to the variables that I mentioned concerning inflation rate, government bond, interest spread, and also et cetera, et cetera. So the first event I would like to highlight actually is the sovereign and debt crisis during 2010 and 2012. And then you can see that before the financial crisis, actually countries are more or less the same, right? No matter whether you are Greece or you are, let's say, France, they are very much similar to each other. And however, since 2010, and then you can see that a number of countries, the interest spread actually shoot up and quite strongly. And then very often to the level that for the government of these countries, they find that they cannot borrow at a very reasonable cost, such as in countries like Greece, Portugal, Ireland, Italy, and et cetera, et cetera. And then for these countries, most of them experience a very strong liquidity problem. And then the government of these countries had to conduct austerity programs, and then inevitably they experienced economic recessions. And this probably is the reason behind what we find that in the GIPS countries that actually there is a very low public trust in the European central banks. And however, as you can see that in 2012, September, the European Central Bank actually started a very important program, which is called OMT program, which helped to solve the sovereign debt crisis in these countries and also the Eurozone. And since then, actually public trust started to improve again. The second event I would like to refer is the pandemic. I think we have all gone through it. So we know that how catastrophic it can be. During the beginning of the pandemic, actually you can see the same, the government bond market, the interest rate start to shoot up. However, the central bank actually learned the lesson of the sovereign debt crisis earlier. And then during the pandemic, the ECB actually created a massive bond buying program, which called the PEPP program, and then aimed at keeping the government borrowing cost actually very low. So you actually can see that there's a downward trend. Significantly, the interest rate has been kept very, very low. This was successful and then may explain why the pandemic did not affect the trust level. And actually, the trust level has been improved. And so this is a very good indication. And now, the third event I'm now referring to is the period in 2022 and then 2023, as you know, the war in the Ukraine, and then the energy prices shock, which you actually also can see on the screen that inflation in the euro area usually is about 2%, and then actually went up to more than 10% and then actually dropped. But in fact, our data shows that public trust was not affected by this surge of inflation, okay? Despite the level is quite high. In fact, I checked the European Central Bank survey on the households concerning the inflation expectations 3 years ahead. You actually can also see that the survey actually shows that the inflation expectation will be relatively moderate or mild. So it's very much consistent with the Eurozone 2% inflation target. So these data actually confirm what we have found in the public trust, that inflation is not a major concern for the public. Why is that? Because as economists, usually when we talk about high inflation above 5%, we will say, well, this will affect the credibility of the central bank. But actually, the data shows that it's not the case. I think the major reason is related to the fact that these energy prices shock, which is a supply shock, actually is a very temporary shock. So as you can see that the natural gas prices shoot up during the period between 2022, and then actually in 23, it already goes down. And then I think today it's still at a relatively acceptable level. But of course, that is the major reason that I believe the inflation is not a major factors influencing the public trust in the last 5 years or so. Of course, now I would like to highlight one very important issue is about the recent operating procedure for the central bank, because inflation was high, so they want to fight the inflation, right? So they conduct a new operating procedure, and then I believe that it can impact the public trust in the European Central Bank. So let me give you a little bit idea how this new operating procedure is conducted. So basically, in 2022, the European Central Bank, in order to fight the inflation, they increased the rate of remuneration on bank reserves, which are deposited in the central bank. So this procedure is the same in everywhere, in major countries such as the US Fed, the Bank of England, even other countries. And then I would like to show you one important graph. So this is what has happened in the euro area. So since 2010, since 2015, as I mentioned, that there are a massive bond buying program, right? So therefore, if you look at the balance sheet of the euro area, you actually can see that the balance sheet has been tripled. So which means that there are a lot of bank reserves which is stuck in the banking system, in the system. So in order to raise the interest rate effectively, so basically the European Central Bank needs to remunerate the bank reserve. They tell the bank, say, well, if you do not lend out, I will provide you a good interest rate, like 4%, 5%, so that the banks will find it attractive not to lend and then put these bank reserves on the balance sheet. So as I mentioned, that these bank reserves are massive, and therefore the remuneration, essentially the transfers of massive resources from the from the European Central Bank to the commercial banks. So this is how the direction and then the major issue. So as I am going to argue that this actually has created a fairness issue in the society. So I would like to show you a little bit about this fairness issue. So as I said that the central banks are remunerating bank reserves, right? On the screen, you actually can see in table 1, I computed the total yearly transfers from the central bank to the banks, right? In 2023, it's about 120 billion, and then it is about 0.9% of the total GDP, which is massive, right? And then to give some perspective, the total annual spending of the European Union is about 165 billion. So banks actually obtain a very good amount of money, 126 billion, without any condition attached. As you know that for EU countries, in order to spend this budget, right, you have a lot of political discussions and condition attached. At the same time, if you look at the national banks, national central banks, right, like the German central banks, the French central banks, they actually transfer more than the total annual seniorage gains to commercial banks. So actually, the banks I mentioned now, like the German central banks and the French national central banks, now they are making a loss every year since 2022. And while if you look at the banking sector, actually I have friends who are from the banking sector today, and then you actually can see that the profits of the banks is very impressive, that 66, so more than 50% of the profits are actually related to this transfer. So I think that this is creating a kind of fairness issue. So here, if you are interested in individual countries, you can also see that different countries experience this transfer differently. Like countries like with a very big banking sector like Luxembourg and etc., it's a high in the ranking. They actually transfer much more resources to the banking sector. And while countries in the lower ranking here, maybe due to its a small banking sector, actually they transfer to this sector less. But I'm just saying that actually there is some fiscal implication for that, because the central banks needs to transfer this money to a particular sector, which means that they will not be able to hand over their profit, the seigniorage, to their own national government. So there's a fiscal implication that maybe this country also would have to do some fiscal contraction of austerity in that form. So this is something that I find about fairness issue. Another issue actually is related to whether it's an effective, because the major argument of the European Central Bank saying that they would like to conduct this policy is because they want to fight against inflation. So the major channel is through the interest rate channel, because if you raise the interest rate, and then this actually will mean higher interest rate cost for households and firms, and then there will be lower investment and the consumption demand. In that way, you cool down the economy, you reduce the inflation. But at the same time, I think we find another very important channel, which is not very well publicized, is actually the central bank, by remunerating the bank reserve, they also create additional money in the system. And then these interest payments actually go to the banks. And then banks, when they have stronger equity position, they also tend to want to lend more, which actually has a positive impact on the inflation rate. So what I'm showing you is actually like the ECB is blowing both cold air, but at the same time the hot air. So this actually make the monetary transmission mechanism less effective, which is also creating a challenging for them. Okay, and then I also want to talk about, well, is there anything that can be done, right? Can be to deal with that? So the answer is actually quite a positive. So we actually can learn from what has happened in the 1970s and the 1980s. So what I'm arguing here is what happened in the last 2 to 3 years. It's actually a very extraordinary outcome. We didn't experience this before, and then it actually have a cost on the society to fight against the inflation. I'm arguing this that I think that we cannot afford this kind of situation in the longer term, because every time if we want to fight inflation, we need to remunerate the bank. But when uncertainty in energy prices or other supply issues are more likely to occur in the near future due to wars or climate change, it's better we find some solution that is more fair and also more effective. So lessons can be learned from the 1970s and the 80s, when the central banks at that time actually didn't lose that much money in fighting inflation. And then very important instruments on top of the interest rate instrument is basically the minimum reserve requirement, or kind of two-tier system that have been widely used at that time. In fact, if nowadays you go to emerging economies, they are continue to use this kind of instrument. But however, I think in the advanced countries, somehow there's a reluctance to use that. The only two countries are using that, Switzerland and also Norway. They are using these two instruments in this kind of direction. But actually, I just want to give you a flavor of this tier system. It's actually technically quite easy because you have the bank reserve. Instead of saying that I remunerate everything, what you can do is you can divide them to the part that you will not want to remunerate, and then the other part that you would like to remunerate. So I actually give you a very simple example. For example, you have a bank has a 100 bank reserve, the other has 200 reserve. Then you can tell the bank, well, I will only remunerate anything above the 50%. So actually, these give the banks the incentive to deposit money there, but it can also be quite cost effective. In fact, I would point it out that actually the European Central Bank used the same system during the 2019 and 20. At that time, it was the bank needs to pay the European Central Bank, and then they actually were not willing to pay. And then the European Central Bank find this system to accommodate their demand. Okay, I hope I didn't talk too long. So my conclusion. So the public trust in the European Central Bank actually declined since the global financial crisis and then dropped to its lowest during the sovereign debt crisis. So the trust has gradually improved during the pandemic, the energy prices, but I must say that it remains very fragile. So crises have challenged the European Central Bank to adopt new policies, new instruments to fulfill its evolving responsibilities since 2012. So I would say that actually probably the European Central Bank in the future could do more. And actually, I refer to the Maastricht Treaty because very often when the central banks were pressed to do more, they would say that our main responsibility, our main business is price stability. But if you look at the Maastricht Treaty, it is written as the following: without prejudice to the objective of the price stability, the ECB shall support the general economic policy, which include full employment, a higher level of protection, and an improvement of the quality of the environment. So based on that, I think that in the future, we may have more issues such as financial stability and also sustainable growth and also the fairness issue. So they will continue to affect the public trust. So I also believe that the ECB will be challenged to do more than price stability to safeguard the union. Thank you very much.
Thank you so much. Sandra, do you want to come and...
Yeah.
Yeah, absolutely. I think you're going... Do we have a microphone?
This one.
Oh, this one, yeah. You hear me? Yeah. Thank you very much. First of all, I would like to thank very much Yuemei for inviting me to reflect on her inaugural lecture, especially because I'm not macroeconomist. I'm just a professor of innovation studies. So thinking what I could say, I decided first I'll draw kind of key takeaway from this lecture for those of you kind of were either sleeping or this seems too far from them. Second, two methodological reflections, and then one personal reflection. Yeah. So first, I think you all understood that Yuemei is an excellent speaker. Yeah. She knows to talk. You know, no surprise that students like her because she's articulate, she is clear. And the three key takeaways from this lecture are kind of clearly for me articulate here. First is which comes from research, and that is that the public trust in the ECB has been fragile and closely tied to economic crisis, and it was a reflection not really of fundamentals. And Yuemei and Paul have, in their nice paper, show the differences between US and EU, where actually the situation would be the other way around if you look at the public debt and these things, kind of. So she brings really important point, which comes from this different understanding and understanding what is behind. That there is always kind of human agency behind and perceptions, and that's where all the kind of methodology of behavioral macroeconomics come. Second is that the recent economic shocks haven't reduced this trust. Of course, Mario Monti, 2000, whichever year, whatever it takes, kind of brought this back stability. But then new issues have arisen, and the new issues are a new policy tool, which increasingly show the issue of fairness in society. Kind of, and that's quite important, the story with the large interest rates of the banks. So that is a very important also results. And the final point is that the task of ECB is not just to think about the price stability, but also about the other economic objectives, employment, environmental quality, kind of. So this is reminding basically of the broader remit of the central bank, and that these broader issues should be of concern. So that is nicely presented here. Now I'm coming to my kind of two methodological reflections, because Yuemei is a type of economist which I like very much. Why? Because you have economists which start from the model and then try to fit reality into the model. What Yuemei does is basically looking at the reality, looking what are the stylized facts of the situation, what is the context, understanding political economy of that. And then I will see, what I can do with it, kind of, what I can model to it, kind of. And that is quite important, because this is related to something which in economy is called Ricardian vice. What is the Ricardian vice? Joseph Schumpeter, well, economist in my area, was complaining about David Ricardo, who basically had this kind of idea that economy it should be abstract, deductive method, that should be dominant, kind of. And there is, of course, element of truth that you have to have some kind of rigor and consistency, but if you go too much, then what you get excessive deduction, you get oversimplification, you get detached from reality, and you have logical rigidity. Basically, you're not able to grasp the context, kind of. And I like Yuemei's, and this lecture fully reflects that she basically starts from the reality towards the model. And you can see it more if you read her papers, that is the logic which goes. And that is extremely valuable. That is a way out also for the economics. It is also a way for many of the colleagues here, I remember Peter Duncan long ago telling, first time I understand these economists. Economy should be understood. And Yuemei absolutely can be understood by people who are not economists. So I consider it as a really as a value in itself, kind of. But it comes from a simply different methodological perspective. Now, my methodological point is that her research is based on something which is called behavioral macroeconomics, which is the idea that we are not rational beings. We don't have a perfect information. There is the notion of bounded rationality, cognitive biases. There is a whole body of research which kind of economists cannot ignore. And for too many years, economists have been simply blind to it. No, it doesn't exist. And of course, they build their fantasies, their models which don't have anything to do with reality. And the good thing, which I like about the Yuemei's research, which is close also to my area, that you start first from these fundamental truths about the human behavior, about human psychology, and take that into account. And their empirical results show these biases, basically. They show irrationality also of the market. They show this, bounded rationality. They show irrational exuberance. They show all these phenomena which man on the street understands, but somehow economist in a sky somewhere doesn't recognize. She is bringing economics back to the world, and I think this is not the last word from her and from Paul, I would say, because I think already in this lecture you can see that this is not, and this is my second methodological point, that this is not only about individuals. Yes, individuals are irrational, but also we operate in groups, and there is something which is called interest group interest, And much of what is presented here would be a fantastic story for a political economist and for political scientists. There will be whole another story about the interest and how something which seems, so neutral, so objective as monetary policy is actually deeply political. So I think that what I foresee in Yuemei's further research, she will simply have to and will go and is already giving a sign of that she will basically make a hybrid between behavioral macroeconomics and political economy. And that I see as almost inevitable. And why I'm sure about it? Because she's empirically driven. And inevitably that her empirical flavor, taste, urge will lead her to that. And as I'm looking really forward, and this is not the final word, this is basically just a sign of a very successful future career, and I'm really looking forward for the future research that will come out of your laboratory, so to say. Because you will attract a lot of also young people who are attracted with this kind of empirical flavor. So my final personal reflection is we are in a school where many of us we are kind of area study specialists, and I divide us in two groups. One of those like me, like Julia, like Svetlana, who come from a country and then we reflect back on the region where we come from, kind of. The second is people like Simon, who's a proper British, but then reflect on Russian history, world expert on Catherine the Great, kind of. And that is a kind of, another type. But imagine that there is a third type, which comes to another country and becomes expert in that country. So I've very often, when I was doing my administrative duty, I would proudly say to people around, oh, we have a Chinese-born expert on European macro. And they look at me like I'm crazy. But I invite you to think about another situation. Imagine that you go to China and that you are expert on Chinese macroeconomy to the point that Chinese Monetary Policy Committee is listening to you. That is the depth of success. Yeah, that is what Yuemei has managed to do. I mean, let's think about it. That is something for me very profound. And I distinguish here two things. One is that this is a personal success, because very few people can do that. Going into another context and understand fully that context and being insider into that context, that's a great achievement. But I see there not just personal success. I see Yuemei's story as a sign of something which is a much, for me, more significant. And that is the fact that in today's world, where we have this political push to try to put us into our corners, and make these distinctions, her example shows basically that there is much more that unite us, that we are much better able to understand each other, and it's a kind of symbol of a possible alternative kind of world and a context to which we, especially today with this marching nationalism and fascism, is extremely valuable symbol. So therefore, your success is not only your success, is a symbol of something to which we should all strive. So thank you very much.
Thank you.
Yeah, that's right. Thank you.
Well, I think this is on, is it? No. Is that on? Yes. Yuemei, you can see that the brilliance and the clarity of your lecture it came out in that really impassioned appreciation of it and the significance of your work. And yes, I did at the beginning sort of suggest, and I didn't mean it to be this way, that this is the kind of pinnacle of your career, as if you weren't going to go on and do yet more brilliant things. I didn't mean it that way. Clearly, you are going to be one of the absolute leading voices in your field, and so thank you so much for such a wonderfully brilliant lecture, and one that someone like me, who knows virtually nothing, really understood and really took away so much from. So thank you for that absolutely brilliant clarity. And I think, and Slavo, thank you very much for your very passionate appreciation. And I think again showing some of the significance of the research. I think there was enough indication to me that there is the glasses and some alcohol have arrived next door. So one last round of applause and then a celebration next door. And I know that you wanted questions, but I'm thinking we could have questions.
Yeah.
Will you take questions over?
Good idea.
Over refreshments? Is that all right?
Yeah.
All right. Thank you.